the amount of different institutions, projects, both in and outside of the crypto space, are looking at this. You know, you talked about before, it's been around since 2019, 2016, but I really feel like the hype is now. Would you agree with that 2025 is kind of this year of tokenization?
Oh, absolutely. Yeah. I think there's a few reasons for that.
Today's guest is Nate Allman, the CEO of Ondo Finance. Ondo, which is backed by Coinbase, Founders Fund, and others, is focused on bringing finance on-chain through institutional-grade platforms, assets, and infrastructure. It also leads the market with some of those products, which we will get into during this episode. I'm excited to have Nate in the studio with us. Nate, welcome on.
Thanks so much for having me. It's great to be here.
It's great to have you. To start off, can you tell us a little bit about yourself and how you ended up in this space? Were you working in finance before, or?
Yeah, certainly. So I did begin my career in traditional finance, actually worked in private credit investing for a couple of years straight out of school here in New York City. I first got into crypto late 2016, early 2017. Actually, my roommate at the time was going down the rabbit hole himself and just coming home talking about, Bitcoin initially every day. And he was not mining with our joint electricity bill, thankfully. But it was good timing. It was early in the ICO bubble. And so I was very interested in the promise of decentralized applications, decentralized finance in particular. There was the very beginnings of that with MakerDAO, DYDX at the time. I remember trading on Ether Delta, some of the earliest of decentralized exchanges, but certainly there wasn't a whole lot that was functional yet. So I was very into token investing, trading on the side, eventually left my job December 2017 at the Pico market top to trade my portfolio full time and ended up raising a small fund. And then deeper into the bear market in the middle of 2019, I joined Goldman Sachs on the digital assets team. We were a small 4-person team sitting in firm-wide strategy, responsible for everything crypto and blockchain related at the firm. Being a bear market, there wasn't a whole lot of interest in crypto trading. And so we focused primarily on securities tokenization. We actually got a RFP very shortly after I joined from the European Investment Bank, one of the largest global issuers of debt, in a major supranational organization, to issue a tokenized bond on a blockchain. We eventually got that done on public Ethereum, which I think was a very exciting landmark deal. And I think, demonstrative of the attitude at the time, which is like, let's experiment and learn and do some of these one-offs. But, the path to more interesting, scalable, widespread use of blockchains, particularly public blockchains, for modernizing securities infrastructure was really quite hazy. And I think the political and regulatory climate for getting that done in a big bank was challenging. And so
it wasn't there yet.
Yeah.
Right. 2019 is early for that at Goldman. How did you guys come up with the interest and idea of tokenizing products?
Yeah, I mean, it is and it isn't. I mean, if you rewind even further back in time, in 2016, Goldman put out a 100+ page report, now in the research division, but it was on applications of blockchain, towards primarily security settlement. They looked at syndicated loans, but in financial services broadly, and it was incredibly well done and well researched. I mean, the Federal Reserve put out a similarly themed report at the time, and so there's been broad institutional interest in tokenization for a long time. I mean, I would bucket it into a few phases. We had that kind of research interest early on in 2016. There's another wave in, I would say, 2018, 2019. It was really following the, so-called STO, the security token offering wave in the public crypto space. And there was a lot of money raised from a variety of projects. I mean, a number of 9-figure raises. You think of folks like T0, Overstock, et cetera, try to build these platforms to issue and trade tokenized securities. And so, we were sort of following a lot of the hype from that wave. And, we can get into what the thesis was at the time around where the benefits were. I think things have evolved there and we've been building, but it's certainly been a long journey for institutions' exploration of the space.
Yeah, we'll definitely talk about the institutional adoption and evolution there. But what about Ondo Finance? What made you want to start it? Where did the inspiration come from? Was it your time at Goldman or something else?
Yeah, certainly my experience at Goldman was a big catalyst. I mean, it was a very educational opportunity for me for learning more about the pain points with the plumbing of traditional finance. I got to interview ops and other back office folks involved in the settlement of all sorts of different financial assets and really trying to understand deeply why things are the way that they are. I think that's important, before you start trying to tear things apart and build a new system. And I did build a lot of conviction that the existing clearing and settlement systems are sort of a Frankenstein that have been built in a very, path dependent way, quick patch at a time.
Do people in these positions agree with you on that? Or are they still like, no, this works?
No, I think they do largely agree.
Okay,
and, they
good.
want solutions. I mean, I think there are, in a certain time horizon, generally good reasons why things are the way that they are. And I do think that folks in crypto can often, miss that. To name one example, in crypto, we're very used to the idea of pre-funding all trades, having everything done on a real-time gross settlement basis. We're very critical of things like delayed settlement, T+1, even like T+0, right? And like having a little bit of credit and, netting and delayed settlement does ease a lot of the frictions that we experience in crypto, and can certainly get into that in more detail. But yeah, I think that people in traditional finance do think for sure that, things are slow and costly and error prone, and that tokenization does present, a fundamental opportunity to upgrade that in, a material way. I think that the path to getting there is the more controversial one, which asset class do you start with? Who are the right folks to get together, et cetera. And I really built conviction around starting, my tokenization journey full time at Ondo with tokenized treasuries, where we saw, the combination of a lot of wealth on chain in the form of stable coins. I think at the time we got into the space, there was over $100 billion in stable coins earning no yield. And then, rates on chain having dropped to near zero and rates in the real world starting to rise, to sort of material levels. So the yield coin, as we call them, the tokenized treasuries, were really a no-brainer wedge for us into, building out this broader tokenization ecosystem.
Yeah, we'll definitely dive into the yield coin that Ondo has. But in terms of what do TradFi investors really want from this on-chain finance world, what do they say it would be most helpful? Like, where are they really looking for products, platforms? Obviously, there's a lot of different crypto projects out there trying to push a bunch of things at them. But when you have conversations with them, what do they really want?
It depends a lot on the type of institution, for sure. I would say that where we see the most demand is from asset managers who view the crypto ecosystem as another distribution channel for their products. I think that's a real and an immediate driver. It's not necessarily, the most compelling long-term driver or the only driver, but yeah, I mean, you look at the wealth in stablecoins today, you look at how easily tokens can be distributed to a global and more retail-leaning investor base. And I think it is compelling from that angle. So I think that's certainly a big part of what drove, the likes of BlackRock and Franklin Templeton and Wisdom Tree and others to begin with, their own tokenized treasuries funds. Beyond that, I think there are, of course, cost savings to be had with respect to, settlement of these assets as well.
Yeah. I want to talk to you about USDY Ondo's yield coin, which launched in 2022. It has a market cap of over $500 million right now. What do you think is kind of driving investors' interest to this over the years and especially today?
Yeah. So we actually have two somewhat similar yield coins, I'll call them. We have USDY, which you mentioned,
right?
Which is effectively freely trading outside the US in secondary markets. So that's structured somewhat similarly to stablecoins in that you have to KYC and onboard with us in order to mint and redeem, but you can transfer it freely in secondary markets. And then we have OUSG, which is our, fully permissioned tokenized treasuries fund. That's actually where we started. So we launched that January 2022. And then I think it was August when we launched USDY. There's, pretty overlapping, but somewhat distinct target audiences for the two products. Together, they're stablecoin holders, they're crypto native. OUSG, the permission product, lends itself more to crypto institutions. So that's like foundations, for L1s and L2s and trading desks, particularly that really value 24/7 convertibility between stablecoins and treasuries. And then USDY is just more retail leaning. So, it's more widely held. It's the most widely held tokenized treasuries product out there. But there's certainly a mix of those crypto institutions
That's
as well.
interesting because I thought it would be TradFi investors more so than crypto native ones. Do you see kind of an opportunity to tap into them as well? Or do you want this to kind of grow within the crypto ecosystem?
Yeah, absolutely. Today, though, our target audience is crypto native. It's global, non-US, particularly retail investors. We work with institutions as partners. We work with them on the supply side. We help enhance their products, but they're certainly not the target investor base for our assets today.
Yeah,
I think that'll change as our products gain greater regulatory clarity. Our products are exempt from registration right now. OUSG is a so-called Reg D offering, so it's only accessible to accredited investors. But as such, we don't have to register it with the SEC as a public security. And then USDY is a Reg S offering, so we only sell it to investors outside the United States. If and when we have registered regulated securities, those would be accessible to hypothetically US retail, and those would also be a much greater appeal to institutions broadly.
Yeah, I know you also went to a meeting with the SEC recently. Was it in regards to this kind of like bringing more Ondo offerings to the US, or was it for something else?
Yeah, absolutely.
Tell us about the meeting. Yeah,
very exciting. Is related to the crypto task force. It's been great to see this SEC's interest in engaging with the industry. We went there to give them a little bit more of an education on what we've been working on, certainly with respect to our existing tokenized treasuries products, and then to share more about our plans with global markets and Ondo chain. And then, yes, we also talked about what it might look like to bring those offerings, global markets in particular, to the United States in either registered or sandbox status.
What was the feedback, or no feedback yet?
I probably can't talk about that quite yet, but hope to have more to share in the future.
Fair enough. That's a reporter question from me. In terms of real world assets and tokenization, I feel like everyone is talking about it this year. I went to Ondo Summit. It was very well attended, and also like just the amount of different institutions, projects, both in and outside of the crypto space, are looking at this? You talked about before, it's been around since 2019, 2016, so almost like a decade at this point, but I really feel like the hype is now. Would you agree with that 2025 is kind of this year of tokenization?
Oh, absolutely. Yeah.
Mm-hmm.
I think there's a few reasons for that. I mean, historical attempts at tokenization really failed to get any traction at all. And despite a lot of investment, I think they were built on a bit of a misunderstanding of the benefits of tokenization. If you look at the 2019, 2018 wave, to some degree, the thesis was always that tokenization would bring greater liquidity to, traditionally illiquid assets like syndicated loans or private credit. The thinking was like, well, tokens can be transferred cheaply and quickly. These assets have high settlement costs, so let's just combine, the two together. But I think in reality, it's not technology that gates liquidity in these assets. It's, the fact that they're hard to price. They're somewhat esoteric. Issuers don't want there to be a lot of liquidity in them. Other sorts of regulatory challenges. I think a lot of these issues are addressed, frankly, through securitization, at least in the context of private loans. You sort of group assets together, get those with similar risk profiles, and then, tranche them out. And I think we'll continue to see that, and, tokenization can play a role there. But, we've been focused instead on the appeal of tokenization through expanding accessibility, which is really what stablecoins have done, right? I mean, stablecoins have expanded access to the US dollar to this very global audience, folks in emerging markets that, couldn't easily hold dollars can hold stablecoins. And that had a ton of product market fit. And I think the story that yield coins are just a better version of stablecoins, because of course you actually get, the underlying interest, and then they're generally a little bit safer from an investor protections perspective. I think that's resonated really broadly, both with crypto natives and with institutions. And so it's led to a lot of excitement, a lot of investment in the space, and folks thinking again about, how do we take what clearly works in the context of stablecoins and yield coins and expand it to other assets. So in our case, that's like other publicly traded securities, like just build on the same thesis, that of expanding accessibility, for already easily priced liquid assets. And I think that's resonated with the marketplace.
We're about 5 months into 2025. Where else do you see it expanding for the rest of the year?
Well, our focus this year is very much on launching Ondo Global Markets.
Let's talk about it.
And launching Ondo Chain. So both of those will be coming this year.
Okay, I could guess what Ondo Chain is, but what's Ondo Global Markets?
Ondo Global Markets is our platform for tokenizing exposure to publicly traded stocks, bonds, and ETFs. The wrappers are very similar to USDY. So, you have to be KYC'd and onboarded with us to mint and redeem. That'll be done primarily by institutions. But anyone outside the US can hold these assets in secondary markets and can acquire them on a variety of centralized and decentralized venues, which will, make more public a little bit closer to launch.
Okay. Outside the US, so where do you see the most demand for this? Like, are there specific countries or regions that you want to target and or are getting response from? Remember trying to move your assets between chains, watching the minutes tick by, wondering if your transaction would make it? Yeah, we've all been there. But here's the thing. While other bridges feel like taking the scenic route, Across is your express lane. Base, Arbitrum, Optimism, boom, boom, boom. Your assets move between them faster than you could say cross-chain. Across isn't just another bridge. When Uniswap needed the fastest, most reliable way to move assets cross-chain, they chose Across. Now, millions of Uniswap users are swapping between chains without even thinking about it, because that's how it should be. Whether you're moving assets yourself or building the next big thing in crypto, Across makes cross-chain feel like the same chain. No more scenic routes, no more complexity, just 2-second transfers between chains. Ready to join the Express Lane? Head to across.to and experience what bridging should have been all along.
Well, it's global. I mean, a lot of it is in APAC, but I would say it's crypto native. I mean, it's crypto wallets right now. It's crypto exchanges. All of the exchanges and wallets are kind of racing to become one-stop shops for investors to get exposure to crypto and securities. There's a lot of benefits of having those together. I mean, you can do things like cross-collateralized loans and derivatives and other financial positions by both assets, if they're either on the same platform or on the same chain, on common settlement rails. So the stablecoin market is pretty dominated in Asia, and obviously a lot of crypto trading, and these crypto exchanges are as well. So that's certainly been our pretty overwhelming focus.
Fair enough. There's also a saying in crypto called tokenize everything. And I don't necessarily agree with it. I don't think everything needs to be tokenized, but I'm curious your take on it. Do you think that is the future, where we just tokenize everything, or it should be intentionally done, or we just let the market decide what's valuable? Yeah,
I mean, I do think most financial assets will be tokenized, and that, they'll live on blockchain ledgers. I don't think that's going to be something that anyone really thinks about. It's in certain contexts of like trusted finance, where you have a relatively small number of participants who trust each other, who are running the settlement network. It does at the limit become a sort of not that interesting technology choice, a sort of database choice, if you will. And yeah, I think the notion that certainly everything should be tokenized today is a little bit crazy or misguided. And I think the vast majority of projects that I look at in the real world asset space are doing things related to tokenization that, in my opinion, don't really leverage the benefits of the technology in ways that are going to deliver value to investors or other stakeholders.
Yeah, I agree with you. Yeah. In terms of tokenizing assets on chain opposed to just going through the traditional rails, what do you think is the most appealing part? Like, how do you sell this to someone that's kind of like, well, I could just go use something else that's not on chain?
Well, for many folks in the world, they can't, right? So, or it's
because they're
very challenging too.
Or what? Why?
Yeah, I mean, for folks in a lot of countries, like if you want to get access to U.S. equities, I mean, you have to go to some like pretty institutional broker dealer that has like high minimums or charges crazy fees. The actual process of settling U.S. securities globally, or more generally, the process of moving securities from one region to another is very cumbersome and has a lot of costs. And, those costs are friction, which restricts access, to those that have enough means, essentially. So I think the most straightforward pitch is access to just buy and hold, just like it was for stablecoins. I think there's a variety of other lenses of accessibility that we at Ondo are interested in. Many of them you see in DeFi, right? So DeFi gives you access to control where you use your assets, right? What lending, trading services you want to take advantage of, and where you want to hold your assets, right? It decouples this notion in traditional finance of having to go to typically a broker dealer to get all of the services related to your securities from, whoever's custodying them. Institutions are able to decouple these things, but it's a little bit cumbersome. And so that makes it not accessible to retail. So yeah, we look at the ability to more easily hold assets, to direct where they're used, what services you use on top of them. And then, of course, longer term in the future, there's cost savings and other efficiency gains. Yeah, for sure. We also did not talk about Ondo's short-term U.S. government bond fund, also known as OUSG, and it has over $400 million in asset value across, I believe, 67 holders. That's what I saw on rwa.xyz. 67. So is that 67 addresses that make up that whole 400 million? Yeah, it is. So
who are these people?
Well, a little bit earlier, we were talking
entities.
about the two tokenized treasuries products that we have. So the one you're mentioning now is the one that I described as being fully permissioned. So those are like crypto foundations, startups, high net worth individuals, trading desks. And then USDY is the kind of counterpart, more permissionless product that has, more in the neighborhood of 10,000 holders right now. And those are generally a little bit more retail leaning. So yeah, there's a relatively, large amount of assets per holder right now. But I think that, signals a lot of growth potential ahead.
For sure. Okay, that makes a lot more sense. I'm glad we clarified on that. In regards to that, a lot of the token supply is on Ethereum and then Solana, Polygon, etc. How do you kind of see the opportunity for these types of funds and products to expand on a cross-chain level in the future?
I mean, we certainly live in an increasingly multi-chain world. We're pretty agnostic in general to where we distribute our products. Like we just want to meet users where they are. So like we're monitoring, what TVL, user count, transaction activity looks like in different L1 and L2 ecosystems. We are building our own chain, but our own chain is very purpose-built towards facilitating that multi-chain distribution. In some ways it acts as a hub in like the hub and spoke distribution and governance of our infrastructure on these different chains and helps facilitate bridging as well. But yeah, I mean, we're live on 9 L1s and L2s right now, and that's growing pretty quickly. So there'll be a number of more chain expansion announcements this year. Do
any of the chains say to you like, hey, don't go to that chain or just come to us?
There are a lot of competitive dynamics of that style within the crypto ecosystem, for sure.
Because I'm a multi-chain person. I believe in, there's a lot of different ways that each of them can have value. But I can imagine that some of them are like, why didn't you just launch on us? Nobody else.
Yeah. We have a pretty tribal industry.
And you put your foot down. You're like, no, we're not doing that.
I think that our stance of being, the sort of a neutral, sort of Switzerland-like place, is understandable. So we don't get too much pushback.
Okay, fair enough. We also talked about the Ondo global markets and expanding U.S. markets globally. But how else do you see capital markets coming on chain, both in the near term through Ondo and then long term in the broader industry?
Well, the next step beyond simple asset tokenization is bringing financial services on chain. So actually taking DeFi, taking decentralized lending, trading, derivatives and other protocols and putting on some guardrails, some permissioning and making it suitable for institutional finance. That's something we've seen baby steps towards. We've always felt really strongly that the use of DeFi, the use of smart contracts really to facilitate financial activities is a big potential value in tokenization. When we launched OUSG, so the fully permissioned tokenized treasuries product, we actually launched a week later Flux Finance, which is a protocol, a DeFi protocol that lets investors lend and borrow stablecoins 24/7 over collateralized by tokenized treasuries. And so it looks a lot like treasuries repo markets, which are enormous and like very much a cornerstone of modern finance. But, those are traditionally pretty opaque and expensive and super, super walled off. And, we made a version of it, analogously has all the benefits of DeFi. It's, quasi permissionless, 24/7, super transparent. There's no marginal cost of provisioning the service, so retail can access it. And it's been really useful for us in educating institutions, even regulators in some contexts on, what the slightly more distant future can look like in traditional finance once we get all assets, actually on chain in the first place.
What other challenges persist today that Ondo and the other on-chain solutions in the space have to consider and also try and overcome?
Well, there's certainly a lot of regulatory complexity, especially as we target an increasingly global audience. So that's a big challenge. There's a big educational challenge. I mean, one thing that, we've had to focus a lot on is the importance of investor protections and structuring real world assets well. I mean, since we launched our tokenized treasuries product, there's 50 plus others that have come to market. I think it's very easy to launch a tokenized treasuries product. It's, a little bit harder to do one really well with proper investor protections. And there just isn't quite yet enough focus on, disclosure and getting the right info to investors or token holders to, really facilitate that. Beyond that, I guess, just bootstrapping liquidity and, getting enough folks, in the ecosystem so that the benefits of the tokens can actually be realized.
You mentioned that there are a lot of these launching out there today, and I agree with you on that. For listeners who are looking at all these different products and offerings, how would you characterize a good one opposed to, hey, maybe I wouldn't touch that if it were me? Obviously, you're going to say Ondo, right? But like in general, what would you characterize as like a good fund out there for this?
Well, I mean, with respect to investor protections, I can speak to some of the things that we've done, which relatively few others have done. In the case of USDY is secured debt. So holders have, a first lien interest. They actually have a right to the underlying, and there's a third party, we call them a verification agent and collateral agent, which on a daily basis is monitoring the reserves, making sure that the tokens are over collateralized. They actually have an ability to step in and seize the assets and repay token holders if we ever breach sufficient collateralization. They post these transparency reports daily to us, which we post on our website, which all token holders can see. So I would say the level of, oversight, both with respect to just reporting and the ability to actually step in and, take control if things go wrong, is something that just doesn't really exist at all in most of the structures that are out there. So that's one example, but there's sort of a lot. They just get into, and this is sort of the education challenge. It's a lot of like legal complexities that, investors typically don't think about and, shouldn't have to think about, but distributors and intermediaries, ratings agencies, like they should be the ones who are thinking about these things.
Yeah. So transparency, security, regulated and or audited?
For sure. I mean, I'd say that's where we're very emerging in our space of like what actually exists out there. But like, yes, in theory, those are things that should exist.
Fair enough. Nate, all in, where do you see the future of on-chain finance going in the next 12 to 24 months? Obviously, the past 12 months, in my opinion, has been exponential growth on this front. But where do you really characterize it going in the future?
Well, we're going to continue to see very rapid growth in tokenized treasuries, and tokenized treasuries have still barely scratched the surface of, eating into the market share of stablecoins. And I have no doubt, particularly as the holder base for both assets becomes more institutional, that will accelerate. I mean, institutions are going to demand to get the yield on their treasuries exposure. So I think we're going to see a lot of growth in that space. We're going to launch global markets and Ondo chain. And so we're going to get early data on, what the demand is for, tokenized exposure to public equities. And, I think based on what our distribution partners, wallets and exchanges are telling us, there's going to be a lot of demand. And I think that'll hopefully continue to, open up the eyes for, folks in traditional finance to the broader potential beyond stablecoins and treasuries for tokenized securities, because we really haven't yet seen anything else take off.
Mm-hmm. What else are you watching right now that you think others should pay attention to, aside from everything we discussed?
Well, I mean, regulators globally are, taking a keen interest in the space. And I think there's, to some degree, a fight or a lot of interest from, different regions that want to be, the home to a lot of tokenization activity. So I think there's a lot coming in that front, and, we're very globally focused, and, we'll have some more announcements related to our global expansion coming soon.
Do you think New York will become one of those homes and hubs to this on-chain finance adoption?
I certainly hope so.
I hope so too. I mean, we're recording this out of New York. Last thing, Nate, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Oh. Gosh, I don't know. I mean, can you narrow the question a little bit, or what type of advice?
I guess advice to listeners on like something that you've held true to yourself when things get tough.
I mean, I guess my advice with respect to like operating in the industry in a time like this, when there's a lot of froth and a lot of excitement going on, is just to, cut out the distractions and really focus on, what you're motivated by and, passionate by. And it's certainly, as a founder, it's very easy to get pulled into, a gazillion different meetings and directions. And, I think about like the early days of Ondo, like tokenization, world assets were not hot at all. And there's lots of like other things we could have pivoted to, but it's, I'm glad that we stuck to what we were excited by. And
yeah, you held the vision. Worked out. Amazing. Well, Nate, thank you so much for coming on today.
Great. Thanks for having me.
Yeah.